Good morning, everyone. We would like to welcome all our clients and friends and other interested parties that are viewing this presentation. My name is Loni Woodley. I'm the managing partner of ATLAS CPAs and Advisors, and I have Fran Coet, my business partner from our Westminster office. We are going to go through some things that in a little bit different format than our past presentations. We have had questions asked us. We've had other things that have come up on various articles about important questions to answer, and we want to answer those. So this is more of a Q&A session, and it does start with questions that we've had from our clients. So some of these may be a question that you've had. We hope that this presentation does help you with just some of the different intricacies of the PPP loan forgiveness and how it may work. And again, one of the things that we want to point out is this isn't legal advice, and we hope that you can see this as informational and educational. At ATLAS, we're trying to educate our clients and others with various topics that are coming up, which we know there's a lot of topics out there today. And we do want you to understand that you should consult your advisors, and the advisor you might have at ATLAS CPAs and Advisors is available to you. Just give them a call and we will help you through whatever other questions that we may not have covered here that you may have. We do understand that there's a lot going on in this world today. And what we wanted to start with is a little bit of an introduction that shows you what's happened all the way back from March. So I will turn it over to Fran to go through some of the different things that we've seen.
Thank you. Yes, I extracted some headlines from the Chicago Business Journal. And for those of you who may receive this as a handout or in PDF, they are hot links into the articles from the 27th of March, which was the date of enactment of the CARES Act, to roughly the middle of May. I think that was the publication date of the SBA 3508, the application for the loan forgiveness under the PPP. There were numerous headlines just in this one publication about the PPP, about its impact. You can kind of read through what the issues were. Certainly the PPP predicament, the employees refusing to return to work. They may have had issues with whether it was safe to return to work, or they were exposing an elderly relative or small children or themselves to an undue risk, or sanitation provisions were not put in place. There were going to be too many people in the business. Self-employed people are eligible for the PPPs, but they were kind of set aside and set back before they could apply. And the application of the PPP was very different for them, partners in partnerships and self-employed people. And so as you kind of read through these headlines, that's where we were, say, the middle of May, about a month ago. And on the next slide, as we go through, I think some of these were hot linked, is from the middle of May to the 10th of June, more PPP type of headlines. And this reflects the additional legislation that we had after the CARES Act called the PPP Flexibility Act, which gave more maneuvering room to the small businesses who qualified for the PPP or were considering the PPP and couldn't get their full workforce back together in the time frame that was given under the CARES Act or under some of the SBA edicts. And certainly the dynamic of the protests, property damage, businesses barely getting opened and then having to close back down again because of some of the protests, all of that impacting problems with the PPP and some of the covered time periods that there were. I do know that as we sit here today, the middle of June, that you have just over 2 weeks to apply for a PPP if you've not already done so. The loan program, as it stands today, will close for applications June 30th of 2020. So if you're kind of on the fence about whether or not you should apply, the Flexibility Act has loosened a lot of the criteria, corrected some of the problems that were created by Congress the end of March. And so it's a much more viable loan for most small businesses to qualify for 100% forgiveness.
Well, I think it's worth mentioning, Fran, that there's more to come. And we've been through several changes just in the first part of this pandemic and the reaction to Congress, from Congress, on helping small, medium-sized businesses. I think that it's also worth noting that Congress did act very quickly on responding to this. We believe that there's more to come. So when we're talking about all of these things and the questions and the forgiveness, be sure to consult your advisor. And even if the new provisions of the Flexibility Act extended the time period, don't wait until the end of that time period. Start calculating the actual forgiveness now, and see where you are, because that could help you with handling any other changes that come up. And as we go through these questions, I would encourage everybody to look at different articles that the SBA is putting out, because the SBA actually has put out frequently asked questions. And some of those questions are answered in their documents precisely according to the law. May be difficult to interpret at times, or may leave some idea of how to interpret it in your eyes. Well, consult your advisor. But the first question that we did have is related to employee count. And I think that was a big question that related to maybe now an extended deadline. Fran, would you like to address these questions?
Yes, as the CARES Act had indicated, the business had an 8-week covered period to prove paychecks and related expenses and non-payroll expenses to push back and qualify for the loan forgiveness. There were 2 tests there. One was in the dollar amount that was being paid out in paychecks and other expenses, and the other was the head count, the FTEs. And so this question is addressing what happens if I've got a reduction in force and I'm not able to fully open, I have to restrict the number of people. What if I only hire back 40% or I hire back 60%? And Loni, I'm curious about your spin on this. So the first question, the count is down from 10 to 6. So does that mean they have to bring back 4 more people to qualify?
Well, as of the last flexibility changes, the Flexibility Act, the requirement of the full-time equivalents stayed the same. It just went extended out. So as we interpret the new provisions, it just changed the date from 6/30 to 12/31. The requirement of having the same FTEs or greater is still there. And the way that we interpret this is if you had 10 full-time equivalents at the beginning and you only rehired 6, then 40% of your loan may not be forgiven. They actually put that as a requirement to get you back to the full-time equivalents. And if you get back to 8 of the 10, then it's 20%. So it's the difference. That's the way that we have interpreted it. Now, there are other provisions in the Flexibility Act that may help with this, and it may allow you to look at a different calculation as of 6/30 that benefits you more. But on that, I would definitely consult your advisor.
And I believe there was another provision in the Flexibility Act that said if due to CDC or some other governmental provisions, you were simply restricted then you were exempted from this particular calculation. Is that not correct?
Correct, and I think that's where that whole second part of the Flexibility Act is a little bit vague, but it is something that what they're saying, I believe, is if you aren't able to by December 31st because of requirements by a state or local government of social distancing or not being able to reopen at 100%, then there are some other provisions that would help negate this reduction of your forgiveness.
Right, that you may not be subject to the reduction of the forgiveness if you can attest to the fact that you're a hair salon and you simply still were at 60% capacity and there was no way to get back up to your full workforce by the governmental restrictions.
Right.
But we sincerely hope and believe that by December 31st, most of this will be in our memory bank. Our own personal history and the history of the world, right?
Right, and it's just one of those things where we can't predict. The government can't predict right now what's going to happen. So they are allowing some flexibility on this, and there's a lot that's going to happen between today, June 17th, and December 31st. So more to come on that. But right now, that provision of full-time equivalents is still a requirement unless there's certain other circumstances that may exempt you from that.
Right.
So in the next one, I know we've had a lot of questions, Fran, about a spouse or giving a raise to yourself and using the PPP money to pay for that. How would you answer the question on raises and spousal income?
Well, first off, there is a restriction in the PPP for the amount of wages that can be paid to anybody, and that's at $100,000 on an annual basis. So that's the first tranche you'd have to go through. The second is, in order to create payroll, there has to be a business purpose. I have a client that owns a locksmith shop and does the security systems for businesses, the physical security, and their dispatcher was unable to work because she had 3 small children she had to care for due to the schools closing. So the wife stepped in. She was already on payroll, but she picked up another role in the business. And their question was, could they pay her more? And the answer was, well, of course, there's a business purpose. But there will be some suspicion, I believe, on the part of the reviewers, the lenders or the SBA, if you go from $500 a month for a spouse to $5,000 a month without a good amount of justification. And the same is true for raises across the board. Let's say you had 10 employees, but you only retain 5. You're aware that you need to have a dollar amount to support the PPP loan forgiveness. So you just give everybody double the salary for this period of time to make the dollars work. That's why there's the FTE test here. So the raises can be a part of it, but it may not cure the entire problem with the loan forgiveness. Agreed? I
agree. I think we just have to be careful. The business purpose becomes a big issue, and there's some certifications and disclosures that you have to sign off on. But there are certain circumstances where providing this for a business purpose does make sense. So we don't want to say that it won't work. It's just be careful. This is what the SBA would not look favorably upon. Agreed. So here's another one that we get a lot, and I'll paraphrase the question that maybe helps us to the answer, is that we do have people that take one paycheck at the end of the year, and it becomes a little bit problematic on these type of situations where we want to show that they are being paid in that 8-week period, and there are some indications of a normalized payroll or a normal payroll. And so, Fran, how would we answer this question of making one payment versus just a normal payroll payment?
Well, I think we need to make it look like what it is supposed to be. This is a paycheck protection program. So it's not a bonus program. It's not a one-off program. It is a paycheck, and it was structured on a biweekly basis, I believe, because that's the way federal employees payroll works. So what we would suggest to this client is, I understand that you may have only taken one paycheck a year, whether we sanction that or not, that's the way you've been doing things. For the purposes of the PPP, we would like to see you take identifiable paychecks on a routine basis, either semi-monthly, bi-weekly, or even monthly, but not just a one-off check. That just looks like a distribution, and it could be challenged by the lender or the SBA.
It just makes it easier to understand the forgiveness. And I think when we're dealing with banks that are still learning how to deal with this forgiveness and the application for forgiveness, we just want to normalize things as much as possible. And therefore, that's why we're kind of we're saying that it would be best if you took monthly, biweekly, or semi-monthly payrolls at this point in time through that 24-week period now, if necessary. I think the next...
Loni,
go ahead. I'm sorry, Fran.
I'm sorry to interrupt you, but it's the same attitude accountants have if a client is being challenged for a tax audit, for example. The way I approach that is I will do a audit and I will do the auditor's work for them. If there's a problem, I want to know it before the auditor knows it. And I want to feed it to the auditor in the best possible light for the client. If I'm dealing with a lender, I want the documentation to be the best possible documentation and presentation for the banker. And you don't want the banker scratching their head saying, what is this? You want it to be identifiable. You want it to be routine. You want it to say, okay, I know what that is. It walks like a duck. It talks like a duck. I'll pass it on to the SBA and they'll feel the same way about it.
Right. The next question has to do with a comment we made in a previous presentation about incurred and paid. This question says, if I got funding on April 15th, but they paid a payroll on April 30th, can that entire payroll be covered in the forgiveness?
The technical answer is no. But what you can do is reset your payroll so that when you start the next pay period, which would start May 1st, you would use the alternative pay period rather than locking into that anchor date of the funding. Otherwise, you're going to have to kind of jerry-rig that April 30th payroll to include only 4 days of payroll and then go with your biweekly or semi-monthly. It would just be, the Congress through the Flexibility Act and through the SBA 3508 have offered us options as to how we start our covered period.
I think it's worth mentioning that you're going to get, in the case of 24 weeks, now that the Flexibility Act is out, you're going to get 24 weeks of payroll that was paid as part of your forgiveness calculation. Whether that's at the beginning or the end, or you readjust your payroll, you'll still will get 24 weeks.
Right, yeah, it was an issue with the 8-week period, but I think it's become virtually a non-issue since that has been rewritten in the statute from 8 to 24 weeks.
Yeah, and the only caveat to that would be if you just can't open completely and have your entire payroll back, which was used for your calculation of the actual funding. So that's why they extended it 24 weeks, is to give more people more time that they knew were not going to be opened for that 8-week period, because there's still a lot of restaurants and various other businesses, as you mentioned before, Fran, that aren't fully open and aren't fully staffed. But you will get the full, whatever you pay in that 24-week period should be eligible for forgiveness.
Correct.
One of the other ones that we've heard a lot about is the SBA making payments for other 7A loan programs. Fran, how would you answer these questions?
Well, that is another provision. This is not part of the PPP, but it is another provision of the CARES Act that the SBA for 6 months will make the payments on an existing 7A loan. And this is rather quirky to those of us in the accounting profession. And actually the FASB, I believe, has issued a couple of edicts about how to handle this it as a grant. So we've got a couple of issues here. How do I put this in my accounting? So how am I going to book this? I've got an existing loan that has interest, which is a deduction on my profit and loss statement. The principal is on my balance sheet as a liability. And now a third party is coming in and making the payments, reducing the principal and paying the interest. Well, I'm not going to be able to deduct the interest because I'm not paying it. It's being paid by the third party, the SBA, and that's going to go on for 6 months. The principal is actually being forgiven. And in our world of debits and credits, how do I account for the fact that the principal dropped when my cash didn't drop? Where is my offset to that? Loni, any thoughts about how the clients should be booking this?
Well, it's fairly straightforward in the eyes of the accountant, is that it will have to hit other income in a lot of cases for the principal amount. So when you debit your principal on your note, you credit other income is the way that it's typically recorded.
It's still a cancellation of indebtedness. The fact that a third party is paying or forgiving the principal on these 6 months worth of payments has to impact a debit somewhere, right? Has to be a credit. It's debiting the loan and it's crediting something else. And in our world, that's going to be kind of other income is the way it's going to have to be treated.
Right, right. So it's a good thing, no matter what. The SBA coming out and making those payments can generally help the cash flow of a business that has a 7A loan. The next question that has come up several times, it has to do with just if my business the economic impact of my business hasn't really been negative, should I be concerned about really what I take this as is qualifying for forgiveness? And the way that I guess, Fran, that I would answer this is we don't know what is really an economic impact. We've had some clients that haven't dropped off because of it being an essential service or various other services. And when you still have the unknown of what may happen, I don't know that you can say that there isn't an impact yet. And the impact may be seen at a later time, but this pandemic has had an impact on almost every business. So I think you just have to understand what that might be and try to document that in the best way possible, because there is a question on the loan forgiveness application that does require you to say that you have been impacted. But it can be things like even the fact that you have to social distance people, and you may have people working remotely. You may have sales and other things drop off without you even knowing about the market conditions that could impact it. But the idea that it hasn't impacted you, I think Congress has thought through enough that they would say that you have been impacted. You just need to make sure that the uncertainty that you don't know is documented in some way, and you can feel comfortable signing off on that impact. If we have had clients that have said, it's not impacting me, I'm paying it back. So they've done that, and they haven't taken the PPP loan. And that's fair if that's what conclusion you get to. But I think more people have been impacted than what they may see on their immediate financial statements. Does that make sense, Fran?
It absolutely does. I think if we've learned anything from the pandemic and since February 15th, we really cannot predict the future. There are those butterfly wings, wherever they are, that can create chaos halfway around the world or for the entire world. And Congress's approach to the legislation was that the entire nation was economically injured. The entire nation was deemed a disaster area because of the pandemic. So when we have an event like a Katrina or Sandy, or there's a hurricane or a tornado, we recognize that that's a disaster area. We can define that. This was something we couldn't see, and yet it impacted. Yeah, I can't imagine a business that could say we were not impacted. It slowed down, it disrupted, it redefined what normal is in virtually every business I can imagine.
Right. The next question has to do with the two different loan programs. As we've mentioned in other presentations, there's obviously the PPP loan program that we've talked about. There's also the economic injury disaster loan. And the question is, could they receive both?
And the answer is yes, you can receive both. One impacts the other. On the 3508 that the SBA has put out, you have to recognize any grants or loans under the EIDL. The first 10,000, I believe, Loni, under the EIDL is a grant. It does not have to be paid back. Over the 10,000, it was a year loan at 3 3/4%. But you could indeed qualify for both. There are restrictions on the EIDL as to how you can spend that money. If you want to qualify for loan forgiveness under the PPP, then you're spending money on payroll and certain other expenses. But the answer simply is yes, they can get both.
Right. And I think it's just a matter of making sure that you're aware of the different requirements of EIDL and PPP, because there are slightly different requirements of how you can use that money. And just make sure that when you do take out an EIDL, that you understand the purpose of that program. But that program can be utilized by the same people who do have the PPP loans. The next question gets into a little bit more of a calculation, and the question really relates to our documentation requirements or what we've helped with. And we do have the ability to help with the calculation. In this case, it was the original calculation of the maximum loan that they would be eligible for. Remember that right now we're kind of into the next phase in the forgiveness. And I think that moving this to kind of the forgiveness calculation, there are specific requirements that you have to show to a bank when you're asking for forgiveness. It does start with, Fran briefly mentioned this earlier, the loan forgiveness application, which is the 3508. Some form of that. The most recent form is out on the SBA.gov website, and we can provide it to you also. That is a required form that must be completed. And then behind it, like was done with the actual original loan application to get the PPP loan, there are source documents that are required to be presented. And each bank will be a little bit different. We can help you through that, because one bank may require the quarterly payrolls or biweekly payrolls to be completely submitted. Some others want summaries. But one of the things that we have done is just completed the calculation on a standardized spreadsheet that has been vetted by quite a few banks. And it's intended to give the summarized information, so it makes it easy for the bank to say, yes, this qualifies, therefore here is the forgiveness amount that you're asking for. Remember that payroll is one part of it, and that can now be up to, well, it can be greater than 60%. So it's actually on the reverse side, that non-payroll costs, which relate to rents, utilities, mortgage interest can now be up to 40% of the forgivable amount because that has been changed with the Flexibility Act. But if this question really does relate to the true documentations of both the PPP loan and the PPP loan forgiveness, we do have the ability to assist you with some standardized formats that have been proven to go through banks. The supporting detail may be different by the bank that you did receive the loan. Big point, the bank is the one that has to sign off on the forgiveness and that you're following those specific requirements.
Correct. And I think if you go to the next slide, Lonnie, this just kind of lays out the parameters. Then I think what happened was one of the ATLAS offices calculated on a kind of bi-weekly basis the approach that I would have taken for this particular client. They received a loan of about $6,700. And so we started the covered period by setting up bi-weekly paychecks, or I guess monthly paychecks. No, it's bi-weekly. And the question was, can we use all of the PPP for 100% for payroll? And the answer is, of course. The issue was, could I use some of the proceeds, not for paychecks, but for other purposes? And before the Flexibility Act, it was a 75-25 payroll to non-payroll. And because of the Flexibility Act, it's 60-40. But obviously, if you're using 100% of the loan for payroll, you're going to qualify for loan forgiveness on 100% of the loan.
Right. Yeah, I think the biggest challenge that we have right now is just making it easy for a banker. Bankers are bombarded with various pieces of this information, and a lot of pressure is put onto them that they are actually governing the forgiveness in a way that follows the rules. And they're trying to stay on top of several thousands of potential forgiveness applications. So our hope is to make it easy for the banker, and they just have to sign off because we have the standard documentation, and that that 100% gets forgiven.
Right.
And a big point to remember is the forgiveness now is 24 weeks, not 8 weeks. And you have to remember that when you're going into this.
Right.
Some other questions that are kind of fired at us a little bit more combined is that it has to do with the forgiveness application and how do you handle that calculation of full-time equivalents. Do you want to address these questions, Fran?
Well, and I'll give you a little bit of background. This actually was sent to me by a banker. And one of the banker's customers was sending him a question, the series of questions, which he sent to me. So I guess, Lonnie, we are just the go-to people. And basically, as you read through this question, there's a reduction in force. There was somebody who had resigned. And when do I test for these equivalencies? Again, you had to test for the dollars for the payroll, and you had to test for the FTEs, the full-time equivalents. And the small business owner or middle-sized business owner has the option of either testing as of June 30th or as of December 31st under the Flexibility Act to quantify the full-time equivalents. If you don't think you're going to test by June 30th, that you don't have the head count, that you would fail 100% of loan forgiveness, then you can extend that time period to see if we get back to a more normal type of workforce by the end of the year, or if we're unable to get back to the normal workforce, would one of the exceptions apply to the FTE calculation? So there are several trapdoors that are already built in to protect the borrower from having to pay back the loan on the basis of the reduction in workforce and the reduction of employees.
But and I think again that the issues are really they've made it more flexible for things that have changed from the original law, and we would encourage you to consult your advisors that can help through this. Definitely consult your bank; they may have a way that they want you to do this. But as we go through this, we're hoping to help navigate your way through this forgiveness so that you maximize forgiveness. One of the biggest things that we will reiterate time and time is to not wait until the end now of the 24 weeks. Do it now. Find out where you are now on your forgiveness calculation. One of the things that we have had lots of questions about that we can't answer today is there another round? Is there something else they are going to do, the Congress is going to do to help even more? Everything that we've seen indicates that the answer would more than likely be yes, but we don't know that for sure. That's why we are encouraging everybody to truly get ahead of the game, understand your forgiveness, understand that you have the forgiveness application form that you have to sign off on, that you says 3508, so that you make sure that you can sign off on that, and don't wait, because if something else is enacted that can help you more, but yet you don't know where you are today, it could delay your ability to get some of the new funding. So please take advantage of this and definitely be proactive as much as possible. I think the last slide just kind of talks a little bit about the mandates for good accounting. And Fran, do you want to cover that?
Absolutely. The PPP on the ask side, I think we at ATLAS were recognized as trusted advisors, that we provided our clients with the information that they needed to ask for the PPP to get the funding. And on the other side, I think it's really critical that you as a business owner work with ATLAS advisors to make the proper entity selection. Just as it was true that the banks were more likely to work with their existing customers, they also were more likely to deal with a known entity. They understand corporations. They sort of understand LLCs. The legislation that created the PPP, it's a paycheck protection program after all, was geared to a corporate structure. They did not forget the self-employed individuals, but the self-employed individuals had to wait an additional almost 2 weeks before they could apply for the PPP. And then we found that the self-employed individuals and partners in a partnership could not use their benefits like retirement and health insurance to be part of the payback or loan forgiveness calculation. So the entity selection that you make to operate your business is so critical, and it supports the accounting that you have to offer to the lender and to the SBA. They like what they know. They're more comfortable with what they know. So it's much easier for them to figure out a paycheck than it is draws out of a partnership or out of an S corporation. And we can certainly help with that accounting structure and the tax benefits that are related to some of those.
Right. So, I mean, at this time, I think the biggest thing is to keep everybody in the frame of mind that things are changing, but it will pass. It's fun to learn new things. Dancing in the rain does seem like that it can be enjoyable. And I think that's the way we would like to end this, by saying, let's keep it that way. Let's try to make sure that we do understand that there is an end to all of this. And what we're trying to do is look for those silver linings that are in this cloud today. And there are silver linings that can help you advance your business, make it a better business. The things that we've had to learn because of remote work and because of how people are reacting to this, it's an incredible opportunity is the way we see it. So if you have any questions about this, please feel free to reach out to us. We would encourage you to stay tuned for more presentations, and obviously the news will be there. Interpretation of what's happening is what we're trying to do as fast and as proactively as possible. So we'd like to thank you for attending and hope that you can stay as calm as possible and as positive as possible, because we do believe that there is the end in sight, and we just don't know that date yet. So thank you for attending, and we welcome you to ask any questions of all the advisors at ATLAS CPAs and Advisors.